bond market is the method via which the government gets money. If the bond market collapses, there's no more method via which the government can get money. So it would be like saying that you're going to cut your own salary to zero. You just, could it happen? Theoretically, it could happen. But how do you run a company, or how do you run your own family, or how do you run your business if you don't have any money? It's the same for a government. If they don't have any money, how can they run the government? So for them to choose the currency over the bond market, it doesn't make any sense, because then they don't have any money. So unless theoretically they could go to MMT and they could literally just print a bunch of physical banknotes. But the point is that is the bond market is the transition mechanism via which the government gets money in today's market.
It was only less than 2 years ago that the Federal Reserve was saying there's not going to be inflation. And then they said, oh, it's temporary. Don't worry. This is transitory. These guys don't know what they're doing. Most central bank officials or bureaucrats or academics, they don't know how the world works. They just want to preserve their job. But you said they've raised interest rates. Sure, they have. But I repeat, they were 21% on treasury bills, short-term treasury bills last time around. So no, we're going to have a lot of pain before we solve this problem.
What would you say are some of the biggest risks for investors in 2023 right now?
The strength of the dollar limited the rise in consumer prices in the United States in 2022. So even though prices were up a lot, they would have been up even more had the dollar not been strong relative to other currencies. Well, if the dollar really weakens in 2023, that's going to add additional upward pressure to already rising consumer prices. All these countries were experiencing inflation. Most of the Eurozones, their inflation rates were higher than ours. I mean, they're still looking at, over 10% year-over-year inflation rates in many European countries. So all currencies were losing value. It's just that on a relative basis, even though the dollar was strengthening relative to the euro or the yen, it was still losing value in real terms.
I think the meltdown of Terra and the meltdown of Luna and the meltdown of the Wildcat exchanges, the meltdown of FTT, the meltdown of FTX, all of those has put the fragility and the defect in architecture of the crypto industry front and center. The regulators have been rousted out of bed, to go on television to answer questions. Congress has been lit up. You're going to see every agency thinking about this. You're seeing mainstream media writing about this. The Wall Street Journal has got story after story after story after story after story.
But you have to realize that we're not measuring prices the same way. So if we took the inflation or the CPI that was used back in the 1970s, and we used that CPI this year and last year, we would have shown annual increases close to 20%, far in excess of the worst of the 1970s. Or you could take it the other way around. If you used our CPI, the one that we have today, and you went back into the 1970s and you recalculated the inflation using the CPI we have today, they wouldn't have had double-digit inflation back then. The highest it would have got maybe was 7%, which is lower than where we are now. So we've already have higher inflation than we had back then. But it's going to get much, much higher than it is now.